It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hello everyone, welcome to INR Bonds, a weekly newsletter, Search for Yields. I am Nikhil, and in today's topic, I'm going to discuss about the bonds which are offering over and above 7%, which can beat inflation. The last 2 years, the fixed income investors who invested in traditional fixed income instruments like fixed deposits or debt mutual funds, which were yielding around 4 to 5%, have seriously underperformed the inflation of average inflation of 6%. The spread between those the traditional instruments and the inflation is getting wider and wider. And from the latest RBI policy meeting, the RBI governor raised the inflation forecast for the year to 6.7%, and also mentioned about the inflation word more than 39 times in his speech, which clearly shows the MPC committee members are clearly concerned about the rising inflation. Globally, the Fed and ECB also sounded cautious and also worried about the rising inflation. The Fed hiked rates in the previous two policy meetings and also guided for an aggressive rate hike in the coming policy meet. The ECB, on the other hand, from the latest policy meeting outcome, they confirmed that they'll be raising interest rates for the first time in the decade, and they also hinted for another rate hike in September policy meeting. And as a fixed income investor, you should always be careful of the high inflation growth, given that the inflation could slowly eat up your purchasing power, and without you knowing that, you'll end up losing a lot of money to the higher inflation growth. Let's say that in the last 2 years, the spread between your the yields between your the investments which you invested and also the inflation growth of 6%, the spread is 1%. So if you accumulate it for the last 2 years and for the current year, the amount of return, the rate of return which is required for you to beat the inflation and also require the previous year losses will be more than 9%. So given this scenario, if an investor is planning to invest in fixed income investments, he or she should look at the bonds or other fixed income instruments yielding more than 7%, which will beat current year inflation. And given that the longer end maturity bonds are prone to interest rate risk, given the interest rate cycle is rising, and the high yield bonds which are prone to credit risk, you should be careful of investing into the which credit issuer you are choosing into. And the INR Bonds QuickInvest platform offers you the proprietary risk score, which incorporates the multiple risk factors, be it credit spreads, be it the macroeconomic factors, industry specific, and the financial risk of the issuer. This score can help the investors in order to who are investing first time into the bonds can read the score and understand the credit riskiness of the issuer. And the QuickInvest bond offers the bonds yielding from 7% and above. So, for example, the AAA rated bonds on our platform are offering 7.5%, and AA rated bonds are offering around 9%. And we also have a bond called Golden Bond, which we spoke about it in the previous issue of Search for Yields. Do check it out. And the video link is given in the description below. Where even if the bond is the Golden Bond is which is the credit risk and inflation risk protected, is offering around 7% interest, which is above the inflation forecast for this year, can help the investors to beat inflation growth of this year. And also, if you want to make up for the losses for the previous year and you want returns more than 10%, you can use our parameters accordingly and set the returns as per your choice, and also choose the risk worthiness of the issuer as per your choice. And also you can use the maturity parameter to set whatever the maturity period you're looking at. As the longer end maturity bonds are prone to interest rate risk, and also the high duration, it's better you look at the shorter end bonds which are offering over and above 7%. Thank you for listening in. Do check out our webinar, which is at today at 4 p.m., where Mr. Arjun Parthasarathi will be speaking about the overlook of debt markets and also where to invest. You can also take up your queries. You can ask him in the webinar. If you are not subscribed to our YouTube channel, please do so to get timely updates from us. Thank you for listening.